In today's video, we're going to be talking about the two types of bulls in the market right now. We're going to be talking about the US dollar dominance that we saw yesterday, which I think could be set to continue. We're going to talk about how far can gold really drop, and we're going to talk about how we can prepare for the PPI and retail sales numbers coming later this week. So first of all, a quick look at the markets here. The S&P 500 came down hard, so did the NASDAQ, and so did the Dow. And I actually took these as buying opportunities as I picked up the NASDAQ, and I'll talk a little bit more about that in just a bit. But the NASDAQ has pushed off of its lows. We'll see if that rally can continue, and I'll talk more about my trade in a moment. The dollar index shot up strong yesterday on CPI numbers and has maintained its momentum for the most part. Well, I should say actually we shot up and then we went sideways, but what I like about this is that we haven't faded the move by any means, and that to me is still a signal that, again, the market is digesting that strength in the dollar due to hot inflationary numbers. Now you might be wondering, Nick, why the heck did you get long NASDAQ if you think inflationary problems are going to stick around? I'll talk again, like I said, in just a moment about that. The euro has come down, the pound has come down, and again, this is just sort of more bowing down to that strength in the US dollar right now. Gold dropped off a cliff. We actually traded back under 2,000 and remained so at the time of recording this, and oil continues to trend on to the upside. So an interesting playbook here to start the day. So let's start out by taking a closer look at that US dollar index. You can see here's the big pop on CPI numbers. Remember that CPI being hot, what does it tell us about fundamentals? Well, it tells us that the strength in the US dollar is because interest rates is what it's all about. If they hold interest rates at a higher period for longer, it makes the US dollar and its yield more attractive relative to other countries. And so if inflation is a sticky issue and it's not going away, the Fed is likely to keep interest rates higher for longer to help combat this problem. So if that's the case, the dollar is likely to look strong relative to other central banks that may be forced to cut interest rates as they are closer to the brink of a recession. I'm thinking, of course, like Europe and UK. So it could be interesting to watch how that plays out, but that is arguably why the strength in the dollar is going on. It is that CPI report that came out yesterday, which really blasted expectations for inflation to continue cooling and for the dollar to come down on the idea that the Fed was going to start rate cutting sooner. Seems like that idea has been taken out of the picture. And I'm definitely not the only one who thinks so. Here is expectations and probabilities for interest rate cuts here in the United States. What we can see here is that this idea of March, which was the sort of predominant thinking by traders, investors, people thought there was going to be a rate cut here. As you'll remember, not to toot my own horn and pat myself on the back too much, but we did think that that was a little bit preempted, a little bit too soon. The market at one point thought it was like a 60% chance we'd see cuts in March. Doesn't seem like that anymore, as now it's a 91.5% chance approximately that interest rates will hold steady in the March meeting. Now, when it comes to May, things get a little bit more interesting, where 63%, still the majority, think we are going to hold interest rates at steady levels. Now, again, this is a very different picture, and this is why the market got shook up yesterday on that CPI number. Now it gets pushed out to June and July. By June and July, there's a much higher chance that we will start to see rate cuts, and the possibility that we even see 2 25 basis point rate cuts by then, with that probability continuing onwards. But again, getting pushed back on this idea and perhaps making it so that the US may not be the first interest rate cut from a major central bank. Maybe Canada was kind of expected to go first, but now it's looking increasingly likely like the US might not be the first one and may even be slower than the group. So very interesting to see that. And I can say confidently that gold has finally made a short-term decision. And some traders who are listening might not have liked this decision. I know that a lot of people who were bullish on gold are probably frustrated by this big sell-off, but I have to say that I think that the sell-off is very justified. Again, if you're somebody who trades gold and you were bullish going into this, I think a moment of just humility is important here, where you have to kind of just say, hey, look, you know what? Buyers were defeated at these levels, and for now, again, the reason I warn here is because CPI has the ability to potentially start week-long trends. Now, that's not a guarantee, and we could totally reverse that very quickly, but for me right now, as a fundamental trader, this very quickly sort of tells me be more on the bearish side of gold at this time, because inflation being a sticky problem takes the whole bullish case in terms of interest rate cuts out of the picture for gold in the short term and could lead to continued selling overall. So I'll watch this one close, but we do now actually have decision in the gold market, and we can solidly mark this level of what was support into prospective resistance. So if price does start to pull back here intraday, I'd be very careful, because it could very easily roll over, and the next target here for me is a move back down to like 1975, and I want to show you guys something fascinating with this. So I showed this recently in one of my videos, and people actually commented on my video recently and said, you know, Nick, the banks were right about gold. And I was like, what? And I kind of forgot that I did this. But look at the bank forecasts on the Edge Finder really quick. I did bank forecast by symbol, I selected gold, and look at what came up. Now this target has been way out of the money, you know, for a little bit here. When we were trading at 2050, I was like 1975, that seems like a good distance away. But the forecast from these bank reports, and basically what we're seeing here is banks like Citi, Goldman Sachs, you know, Forex GDP team, all these different institutional research teams are putting out their numbers, their forecasts for these markets. And look at this. Gold's average target amongst these investors, most of them are below current price, and the average comes out to 1974.5. Look at where we have our chart marked up here. 1974.5 is the bottom of my range here. Absolutely crazy to think that the average target for bank investors, bank traders, at least amongst the ones that we've surveyed here, again, they're targeting this area. And I think that's fascinating, because again, we saw this number back in this area when gold was trading around 2060 an ounce. You know, we saw institutional money being bearish. Again, this is the power of understanding how to use data, right? So bank forecast teams or bank research teams have put out their numbers. We've got access to that, and we can view that within the Edge Finder. So I thought that was a fascinating thing. But someone, again, shout out to whoever commented that. I forgot who it was, but somebody commented, you know, Nick, the Edge Finder showed us that banks forecast teams were super bearish down to 1974.5, and that is coming true to its sort of forecast, which is fascinating to see. Okay, guys, and I did end up getting my very first entry for some time on the NASDAQ yesterday. We had a big pullback, and I will say, many traders might say, well, Nick, that there's way more pullback that could come into this market. And I want to say, first of all, my setup here on the NASDAQ is part one of my trade campaign here. So when I take trades, I usually do some sort of a campaign, meaning oftentimes I'll willingly enter more than once. I may add to a trade, or I may stop out and take a secondary trade. So I mentioned this yesterday in the signals room. We shared this trade. This was our afternoon trade, and absolutely smashed it right off the bat. So we're watching this one again. 17,534 is where we got in, and so far it's looking pretty good. We'll see how it goes. Again, by the time you see this video, the thing could be all over the place. It's very, very volatile right now. But I did also mention that this is my first attempt at getting long, and if I stop out, I'll be readily looking for a secondary entry, as marked out my zones in the picture above. So I'll actually show you that chart on the daily. And by the way, if you're interested in getting access to my signals, as well as Frank and Ivan's, you can get all of that information just by signing up using the very first link in the description. Click that chat with us link, and it will take you to where you can speak with someone on our team. So anyways, check this out. So let's go really quick here to the daily chart, and I'll show you this overall kind of theme here. So the NASDAQ has been in just a monster uptrend, and as crazy as it may sound, there's several reasons why I think it overall could continue. Now, if it has a secondary pullback, or a deeper pullback that is, I'll happily try again, and I'll stop out if need be. If price breaks this zone, I'll be trading the next one, and if that one breaks, I'll be trading the next one. Why am I so bullish? Well, let's go through a couple reasons here. So first of all, right off the bat, is I didn't mention it in this post, but I've talked about it over and over. Earnings have been pretty dang impressive, and when you're talking about an area of the market that has a lot of growth, I mentioned at the top of this program that there's two types of bulls. There's bulls who are very much about growth, earnings, and a strong economy, which would be more on my side of things. And there's bulls that are just sort of junkies for rate cuts. And that's not my view. I think rate cuts are coming this year, but we don't even need them to still see a stock market rally, in my view, when picking sort of an area of the market that is a little bit stronger and resistant to higher interest rates. In general, which I would argue is the NASDAQ, the mega tech companies, because they have so many levers they can pull to still make money. They don't rely on debt nearly as much. And so again, overall, strong earnings. My first attempt here on the NASDAQ, overall upward trend, technical is pretty straightforward. This is an election year, which is historically bullish. The NASDAQ is my favorite of the indices right now due to mega tech being stronger, the stronger area for growth and resiliency in what could be a higher for longer interest rate environment. Okay, so the NASDAQ is my pick right now. If interest rates start to come down, by the way, you'll probably see me be way more bullish on the Russell. I am bullish for the second half of the year on the Russell, which is small cap companies. But again, NASDAQ doing real well. We'll see how it goes from here, though. We have a lot to prove here. The NASDAQ sold off hard yesterday. We've started to bounce. I caught that bounce, and we'll see if that does play out. Here's where I actually took the trade. QQQ is the ETF that I traded on WeBull. And if you're looking to trade with WeBull, there will be a link in the description. That is a referral link. But I'm watching for continued bounce here, and I'll look to trail stops if we do get a good run here. The NASDAQ also popped up as a bullish read. That was part of the reason that I looked into the trade. Although COT wasn't super impressive, overall retail is bearish on it. Seasonally, we still have strength. Trend following in terms of trend, we've got clearly a strong upward trend overall. Economic reads are still strong. PMI, retail sales, we get more of that numbers, by the way, later this week, but we've seen strong economic reads overall. Inflation ticks against us because of the hot read, but again, I don't think that is the only reason to, that's not the sole reason to get super bearish on the NASDAQ. I think that, as I mentioned, I don't think we need a ton of rate cuts to still see a stock market do well overall, as earnings growth is still there. Labor market, again, strong labor market right now overall. That's going to still be a bullish thing in the sale of this NASDAQ trade. So we'll continue to watch that. And interest rates, again, not quite yet playing ball, but still overall we're getting a slightly bullish read, and I will take that as a possible first entry point on the NAS. So watching that. We also have things like dollar Swiss, dollar ZAR, a lot of dollar crosses remaining bullish here. Let's filter out just major currency pairs for my currency traders in the audience. We got dollar yen, almost a bullish read, not quite. Dollar Swiss, bullish. Kiwi dollar, Aussie dollar, bearish and very bearish respectively. Euro dollar, which is another trade that I have on right now, dropped down to -3 from -5 where it was. Let's go have a look at the price action of the euro. Here's the euro dollar, which is a daily chart setup that I took in the group here recently. Again, we've been seeing some nice follow through overall. CPI really helped us out on this. And again, to reiterate kind of the theory behind the trade, we did trim some of the stop loss on this one. Momentum was favoring the downside. COT data was mostly bullish for the USD in the latest round. Bearish trend, stop above previous swing high. And the dollar broke out key resistance recently with recent less dovish commentary from Jerome Powell, strong PMI, NFP numbers, and you could even add now CPI was hot. So again, I really like the setup for the euro, and we'll continue to watch this one. I'll look to trail stops tighter into profit at some point here if we do continue to see a sell-off, but I think the euro has room to run lower, and we'll continue to watch that. Here's the smart money indicator on the NASDAQ. This is comparing smart money positioning from the Commitment of Traders data versus retail positioning. And the comparison here is very key. Check this out. The NASDAQ has been consistently bearish by retail traders, while the price has continued to push higher, and look at what institutional money has done over the longer term. They've really added a bullish position and remain overall bullish. Now, we've had some hiccups where they've sold a little bit, bought back a little, sold a little here in the recent filing, but overall, the positioning has been pretty bullish on the NASDAQ, and I really like the story being told here. Again, institutional accumulation has gone on, and this thing could be set to continue to rocket much longer than what people are thinking. Remember that the market can remain, kind of crazy a lot longer than people expect it to. That's where some of the monster trends kind of form in the markets. And while we totally could roll over further and I'll get stopped out on my trade, I still like the possibility that we are in this melt up event where, you know, equities are finally just completely breaking out. And I want to be more positioned than NASDAQ in this higher interest rate time. Once things change, I may fan out to more interest in like the Russell and you know, the Dow and the S&P. But for now, the NASDAQ is kind of my pick of the litter at this time. The put to call ratio, basically here was at a more extreme reading. We bounced back with that pullback, which I liked a lot. So remember that for this indicator, the put call ratio tells us the volume of puts versus calls, which is a bullish versus bearish sort of contrarian indicator. When this gets very extreme, one way or the other, it can be a pretty interesting signal. So we got pretty heavy on the calls side of things. People were very bullish. That swung back, and during that time, I went ahead and picked up my position as we kind of have a more balanced market. Just something to think about. I like to trade when things are more balanced. I like to avoid sort of trading with the trend when everyone is sort of already parked in the trend, if that makes sense. While we're on the subject of showing off the Edge Finder here, I do want to mention we are doing a 35% off sale. And if you use the very first link in the description right now, you can get access to all of our tools by sending a direct message to our team. You get access to things like the put call ratio, the retail positioning indicator, the bank forecast indicator, which we showed earlier, smart money indicator, the commitment of traders data, our top setups algorithm, and so much more. If you don't already have a copy, this is a great chance to do so while the 35% off discount lasts. This is only going to be available for a few more days before we go ghost mode on discounts. So don't miss that. That again will be, all the links will be found in the description below. Just send us a message using that first link. And Bitcoin continues to be a dominant force. And this is fascinating to me, guys, because yesterday we had CPI numbers and you can see that blip lower on CPI. Why would that impact Bitcoin? Well, if you haven't already checked this out before, I highly encourage you to cross-examine Bitcoin versus inflation. It's a fascinating study, and they have sort of an inverse relationship. When inflation is rising dramatically, Bitcoin has sold off really hard historically. So hot inflation yesterday blipped Bitcoin lower, but Bitcoin just doesn't even care. It just rallied even harder here, and this is really great. Now, I'll tell you where I'm at with Bitcoin. I have a small position, and when I say small, it is a small position. But even my small position has made some decent money. We're up $462 on this trade. However, I will say this, when I got into this trade, this is IBIT. This is a new Bitcoin ETF. The initial sell-off was a wonderful opportunity because I was able to get in to you know, Bitcoin at a lower cost basis through this ETF. I don't even have to do all the nonsense of like getting a, you know, a crypto brokerage or anything. Although I do have a, you know, a Coinbase account, I prefer to have it in my you know, trading portfolio just so I can watch it. But anyways, I bought IBIT, which is iShares Bitcoin Trust. And what's fascinating here is that, you know, as much as I am glad that I got this entry, I was looking to build a position over time. Didn't even get it, just rallied and continues to rally. I'll be watching this one transparently for a pullback if we can get one. I may actually add just a slight bit to my position, but we're up 3.3% again today. And again, this market seems to want to just continue to rally despite the news, despite anything. And while CPI does make sense in terms of selling off certain areas of the market, you know, people will say, well, the news didn't make sense. I'll show you what made sense completely. Look what happened to the Russell yesterday. The Russell tanked on this news. It was down, guys, like 4.5%, 5%. Look at this, 5.2% in a day. This is an index, 5.2% off of CPI. The market is making sense where it makes sense. CPI being hot is terrible for two main markets that I like to always point out. The IWM, which is the Russell, and gold. Hot interest rates or hot inflation means higher interest rates. Higher interest rates are not good for these two stories. This means a stronger dollar for gold, and it also means higher borrowing costs for companies that are more reliant on debt. Point blank period, these markets made so much sense fundamentally. And if you understand the fundamentals, that's why my case is being built for the NASDAQ. The NASDAQ of the group is the one that I like because it is arguably, again, there is debates. If we go into an economy, the NASDAQ will look a recession in the economy, the NASDAQ will look terrible. But so far, right, strong economy, inflation being sticky because of a hot economic prints, we can deal with that. That's not a bad scenario. When's the last time the stock market completely crashed simply because the economy was strong and printing out hot inflation? right? I can deal with that. Now, if you're in an interest rate sensitive area like the Russell, yeah, that's not as fun. If you're in an interest rate sensitive area like maybe the Dow a little bit more, where they have some more debt in their stuff, financial heavy areas of the market might struggle a little bit. We can see it in the sectors as well, right? Yesterday, everything got beaten up, but especially things like regional banks, right? Destroyed yesterday, 4.23%. That was a big catalyst for the Russell. Semiconductors, though, arguably just up another 1% today. And this is the market pattern that we've been seeing. This is a trade for me on the NASDAQ. This is not a long-term investment. And again, the resiliency of this market is why I've picked it up. Could I be totally wrong by the end of the day? Absolutely, I could. Again, my entry is here, but my secondary and third entry will be, if needed, down in these areas to try again. So anyways, that's all I've got here for today. I won't keep you guys any longer. Thank you for tuning in. Last thing, actually, I will say, PPI and retail sales numbers come out Thursday and Friday. I will not be here for those events. I'm going skiing in Colorado, and I will, however, have guest hosts on my channel, as well as my team behind the scenes is doing a wonderful job to put together a great show for you guys, put out some content in the meantime. We've got some videos prepped, so make sure to stay tuned during this week. We'll still have coverage for you, even though it won't be me, thanks to the team. So with that said, guys, make sure to tune into those live streams. Have a wonderful day, trade safe, and see you next time. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.